What up? It's Haley. If you haven't been to my page before, I'm a loan originator in Seattle, Washington. I'm looking to get you into your dream home and find that financing that works for your current situation. In my last video, I talked about pre-qualification. This is a process you do when you start house hunting. Pre-qualification allows you to know exactly what you can afford when you start shopping for homes. This is a fairly simple process to go through. It only takes about 10-15 minutes over the phone, but in this video, I'll be talking about pre-approval. I get a lot of questions about the difference between pre-qualification and pre-approval. So I'm here today to clear up that confusion. A pre-approval is more valuable than a pre-qualification. It means the lender has actually checked your credit and verified the documentation to approve a specific loan amount for you. The final loan approval comes when an appraisal has been done on your home, title has been researched, escrow has been opened, and you have applied for a loan for a particular property. In order to get a pre-approval letter from me, it takes a little bit more than the 10 to 15 minutes that you do for pre-qualification. For a pre-approval, you will need proof of income, proof of assets, credit score, employment verification, and documentation. I will go over each of these steps for you now. Proof of income. This is where we will ask you for your W-2 statements from the past 2 years, recent pay stubs, a year-to-date income, and your most recent federal tax returns. If you're self-employed, it might just be your tax returns and a year-to-date profit and loss statement. Some lenders require balance sheets depending on the type of business. Proof of assets. We will ask you for your present bank statements, investment account statements, and retirement account statements. Also, this is where we will ask you for a gift letter if you are asking a relative to help you with the down payment. This step shows that you will have enough money for the down payment, closing costs, and have reserves in your bank account to make your mortgage payments once your loan closes. Credit score. We will have already run your credit during your pre-qualification at this point. The lowest interest rates and best loan terms are reserved for those with credit scores at or above 740. Below that number, borrowers will have to pay a little more in interest or pay additional discount points to lower the rate. Employment verification. We will call your employer to verify that you still work at the company and verify the salary you gave us. If you recently changed jobs, we will want to call your previous employer to verify that employment and your salary. If you're self-employed, we will ask you for additional information concerning your business. Last step is documentation. We will need a copy of your government-issued ID card, like a passport or driver's license, and signed loan disclosures. This will include the Social Security authorization that needs to be signed to run Social Security numbers, run credit, and things like that. Once you have given us all of this documentation, we will move forward to find you the best loan program and best rates for your current situation. I recently went through the home buying process, and so my biggest suggestion to future home buyers, gather these materials as soon as possible. Because when you're going through the process, you're going to be asked for all of this. So if you just have it ready to go, it won't be so overwhelming. Okay, so that's the difference between pre-qualification and pre-approval. If you have any questions, do not hesitate to reach out to me. I'm here to guide you through the process. Thanks for watching, and let's get you into a home.